Hello, it's Nero here, and what is going on with our property market? After 10 interest rate rises, instead of seeing more and more headlines about the property market crashing, we're actually starting to see headlines like this. Sydney house prices go boom, or bid at packed Sydney auction stuns buyers. Buyers were left stunned at a packed Sydney auction when they heard the first bid for the 4-bedroom home in the city's inner west. The article then goes on to say that the price guide for this particular property was only $1 million short. And at a time when property prices are supposed to be cooling, this property ended up selling for just $20,000 below the suburb record. So there's clearly a shift. Something is changing, and so today I want to unpack exactly what's going on in our property market. I want to go through our various capital cities, looking at the data, and then I want to go one step further, one layer deeper, and look at, well, what's driving these new data points? What areas you should look to invest in if you are ready to invest, and more importantly, what areas to avoid, which many of my trolls will happily comment below as well. So let's get started. Here we have the CoreLogic RP Data Daily Home Value Index, the monthly values. And if we start with Sydney and look at the price change for all dwellings, for the last 12 months, prices have dropped 12.1%. But last month, they rose a staggering 1.4%. Why do I say staggering? Because if you annualize that, so if this was to continue, I'm not saying it's going to, but if it was to continue, that would work out to be 1.4% times 12, which is going to give you 16.8% growth. That's the rate of growth we had last month. Okay, so that's what's making a lot of noise in the headlines. And again, in a moment, I'm going to unpack this, but just to let you know how amazing the growth rate in March was for Sydney. In Melbourne, property prices for all dwellings rose 0.6% last month. Brisbane, including the Gold Coast, 0.1%. Adelaide, a bit of a surprise, dropped 0.1%. Perth, up 0.5%. And if we look at all the 5 capital cities in aggregate, for the month of March, property prices rose on average 0.8%. So does this mean that the property slump is over? Property prices are recovering. We're now about to start the next property boom? Well, not quite. Although these data points are very exciting for obviously prospective sellers, investors who are looking to try and work out the best time to get into the market, you can't just use this general generic aggregate data to then buy anywhere. Okay, so for example, in Sydney, it's not every suburb in Sydney that's rising spectacularly. In fact, if you look at the data, you'll see that it's actually the premium areas that are rising the fastest. Premium Sydney homes gained $610,000 in just 3 months. The value of Sydney's more expensive homes climbed by as much as $610,000 over the 3 months ended March, as the earlier than expected recovery in the top end segment accelerated, new data from CoreLogic shows. Premium homes on the Upper North Shore, eastern suburbs, inner west and the Hills district notched the largest increases, fueled by the chronic shortage of stock and rising demand from buyers looking to take advantage of lower prices. And if we look at what CoreLogic have to say, this is even more apparent. The lift in housing values has been most evident across the upper quartile of Sydney's housing market. House values within the most expensive quarter of Sydney's market were up 2.0% in March, which, mind you, if you annualize that, that's 24% annual growth. Okay, that's how fast house prices in the upper quartile rose in March in Sydney, and the upper quartile of the Sydney unit market was 1.4% higher over the month. So that clearly shows you that house prices are not rising everywhere. And although it is great news for the property market in general, and if you're an investor, it certainly shows that now is a great time to buy, you need to be cautious. So if you're looking to buy in Sydney, you want to be looking at essentially the upper quartile, the most expensive properties. So if your budget is essentially $1.8 million or above, now is the time to buy. But where do you go if your budget's less than that? And is now the time to buy if your budget is less than 1.5 million or 1.8 million? Well, have a look at this. This chart here shows you an area where median prices in September of last year was $300,000. Now, if you look at it, prices have been flat for 2022, 2021, 2020, and then previous to that, for the previous sort of 7 years, they were dropping off a major peak. But as of September 2020, as I said, median prices hit $300,000, and now in March 2023, 6 months later, the median price is $334,000. So a $30,000 increase, or about a 10% increase in prices in just 6 months. So again, if you annualize that, that works out to be a 20% increase in property prices in this area. And look at the price range. We're still looking at the median price of being $335,000 or under. This is an area, however, that I would not necessarily recommend buying because there are some other key success criteria that I don't think this area meets. And this is just one random area that I picked as part of my research that I do every single month, not only for these videos, but also for our clients when we're recommending where the best areas are to buy. But the key takeaway message is that if you're looking for property price at the lower end, what is the lower end? Essentially anything I would say below $750,000, there are multiple areas right now that are rising very, very quickly. And why? Why are those areas rising? We know why the expensive end of town is rising, right? The top end, people are coming in, they see an opportunity, they are not often buying with a huge mortgage relative to their incomes, so their affordability is fine. But why is then the lower end of town nationally rising in general? Well, it's because of two things. Number one, affordability. Okay, so in other words, we've seen that with these 10 interest rate rises, many people's borrowing capacities have dropped by 30% or more. And so there were many people who thought, oh, when prices were rising steeply in Sydney and Melbourne during 2021, that prices would start to drop, and that's when they could afford to buy. But what they found is that their borrowing capacities dropped even more, and they still can't afford to buy. And so what a lot of these people are doing, they're moving. Right? They're moving to less expensive, more affordable areas. So that's the first thing, is you've got increased demand in these areas, and that's driving prices up. But when demand is increasing, the problem is that supply can't keep up. They can't keep increasing supply because when median price point for most houses are below $750,000 in these areas, it's actually not financially viable for builders to be able to go in there and build large quantities of properties. I mean, here's proof. Cost of building a new home in Victoria skyrockets $130,000 in 2 years. Victoria's typical new house cost has surged more than $133,000 since 2021, and the average new home could cost $500,000 to build by the end of the year. So that's $500,000 construction costs, not including the price of the land, right? And that's why a lot of these areas where prices are below $750,000, below $700,000, below even $650,000 and lower again, they are rising right now because demand is strong, but they can't increase supply. So what does that mean for you as a property investor? It means that if you're looking to buy properties at $750,000 or below, now seems like a great time to buy based on the data. If, however, you're someone who wants to buy in, say, Sydney or Melbourne, not that $750,000 gets you very much in those two cities, unfortunately, but if you're looking to buy it anywhere from sort of $750,000 to $1.5, maybe $1.8 million in Sydney or Melbourne, I'd probably say wait, or at least go in there and negotiate really, really hard and get yourself a good bargain. But if you're looking at the upper end of town, so in Melbourne over 1.5 million, in Sydney over 1.8 million, you need to look to buy right now. This is just what the data is showing, and this is why I often say we don't have one property market in Australia. You know, it's not just different cities performing differently. Even in our major cities, Sydney, Melbourne, Brisbane, you're going to see different suburbs perform differently. And as an investor, always remember, you don't just invest in a city. you invest in an individual suburb, and you need to do your due diligence and find those real gold nuggets, because there is no doubt that they are out there. The data is showing that, and this is why I've been beating the drum for quite a while and saying that in 2023 is a great time to buy if you can afford to, because I really believe that in many areas prices are going to rise, and you could be taking advantage of the opportunity and getting in before the others do and maximize the next property boom that is inevitably coming. And if you want to know where to get started, click the link in the description to get a copy of my book totally for free.